Have you ever wondered how big players, like the institutions and professional investors, accumulate huge amounts of stock without anyone noticing and without pushing the price up? Let me take you behind the scenes of how these big players pull off this sneaky maneuver. Think of it like trying to fill a swimming pool with a tiny garden hose. Slowly, methodically, without splashing water everywhere, and without alerting the neighbors. Once you know how they work, you'll never look at stock movements the same way again. First, dark pools. Picture this, a secret back room where deals happen without the world watching. That's what dark pools are like. Institutions make trades here away from public exchanges, so their large orders don't immediately affect the market. It's like buying a house in cash quietly, so you don't drive up property values in the neighborhood. Dark pools allow them to stay undercover while they build up their position. 2. Algorithmic trading. This one's super clever. Big players don't just go in and buy everything at once. They use algorithms, which are basically super smart robots, to break up their big orders into tiny bits. These robots spread the purchases over hours, days, or even weeks. It's like ordering 100 pizzas, but having them delivered one slice at a time, so no one notices you're throwing a giant piece of party. These algorithms make sure the price doesn't jump up because of their buying. 3. Accumulating over time. Now, here's one of the oldest tricks in the book. Slow and steady wins the race. Instead of buying all at once, they spread out their purchases over a long period. It's like adding sand to a sand castle, one grain at a time. You don't notice anything at first, but eventually there's a massive structure in front of you. The key is patience, and big players have plenty of it. 4. Use market makers. Market makers are like the middlemen of the stock market. They are always there, ready to buy and sell. Big institutions use these market makers to quietly slip out their orders. Think of it like sneaking into a busy restaurant through the side door with the help of the staff, avoiding the long line out front. These market makers help large investors buy up stock without causing too much of a stir in the market. 5. Block trading. When they need to make bigger moves, institutions turn to block trades. This is where they buy large chunks of stock all at once, but not on the public market where everyone can see. It's like a private auction. Big investors buy up stocks directly from other big investors. It's all negotiated behind closed doors, so by the time you see the move, it's already been done and dusted. 6. Liquidity events. Here's where it gets tactical. Big players often wait for high-volume trading days, like after a company announces earnings or some big news drops. Why? Because on those days, everyone's buying and selling like crazy. It's like going shopping during a Black Friday sale. So many people are making noise that no one notices the one person filling up their cart with all the good stuff. During these high-volume times, institutions can accumulate shares without drawing attention to themselves. 7. Disguising their intentions with iceberg orders. This is one of my favorites. Iceberg orders. Imagine you see a small part of an iceberg above the water, but most of it is hidden beneath the surface. That's exactly how this tactic works. Big players place an order where only a tiny fraction is visible to the public market. But beneath that, there's a huge amount ready to buy more once the visible part gets filled. It's like playing poker with only one card showing. People have no idea what's really going on behind the scenes. 8. Buying during market corrections. Another brilliant strategy is to wait for market dips. When the stock market takes a tumble, retail investors panic and start selling. This is when big institutions step in. It's like everyone at an auction starts bidding less because they're nervous about spending too much. and then a savvy buyer swoops in and grabs the item for a steal. Big players love to buy when everyone else is too scared to. 9. Counter-trend trading. You've probably heard the saying, buy low, sell high, right? Well, counter-trend trading takes that idea to another level. When a stock's price is going down and everyone else is selling, big institutions are quietly accumulating. It's like swimming against the current in a river. While everyone else is going with the flow, they're strategically moving in the opposite direction, buying shares at a discount. 10. Trading in smaller stocks. Now, this one's more under the radar. Institutions sometimes target smaller, less liquid stocks that don't have a lot of attention. It's like going to a yard sale in a quiet neighborhood instead of shopping at a crowded mall. There's less competition, and they can quietly accumulate shares over time without attracting too much notice. 11. Accumulation patterns, also known as Wyckoff method, is where some technical strategy comes into play. In the Wyckoff method, big players will accumulate shares while a stock is stuck in a trading range, a sort of no man's land where the price bounces between certain levels. It's like slowly filling up your basket in a store that no one else is paying attention to, waiting for the right moment to check out and walk away with all the bargains. 12. Covered calls, or buy right strategies. This one's a bit more advanced, but here's the idea. Institutions call for options on stock they want to buy, collecting a premium. If the stock price doesn't rise above the strike price, they end up buying the stock at a lower effective price. It's like getting paid to wait in line for a great deal, and by the time the stock is delivered, they've saved a ton on their purchase. So there you have it, 12 genius ways big players accumulate stocks without pushing the price up. It's a mix of patience, stealth, and smart strategies. Once you start spotting these tactics, you'll understand why the stock market sometimes moves in mysterious ways, and how the pros always seem to get ahead. If you enjoyed this peek behind the curtain, be sure to like and subscribe. Here's a video that you may be interested in. See you around at Asset Tech.